What's up, my fellow harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. In today's video, we're diving deep into harmonic technical analysis. We're going to set the stage for what could be a major week ahead. We have a lot on the radar: the ISM Services PMI, the upcoming election, the Fed's interest rate decision, Chairman Powell's conference, and of course, earnings reports. So it's going to be important to see how these companies report, as we did get insights into how the blue chips reported. A lot of the companies did double B, but they were projecting lower guidance for the next quarter. So we're going to see if there's continuation into that as well. So first, let's break down these key points. First up, we have the ISM Services PMI. This gives us insights into the health of the service sector, which is a crucial driver of our economy. Then we do have the election around the corner. This is going to obviously affect markets, and the markets could react to any shifts in policy direction. Then we also have the Fed's interest rate decision, as well as Powell's press conference, which is going to provide key signals on future monetary policy, potentially impacting everything from stocks all the way to bonds. It's going to be very important to see how much the Fed cuts interest rates by 25 or 50 basis points cuts. And last but not least, we also have continuation into earnings. So these earnings reports is going to give us a snapshot of how companies are really performing in this economic landscape. So if you're finding value in these breakdowns, make sure to hit that like button, leave a comment with your thoughts, and subscribe to stay updated with future videos. Before I go into the charts, though, I do want to preface by saying I'm not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice, so question everything, do your own research, and come out with your own conclusions. So having said that, let's jump right into those charts. All right, jumping over to SPY here. So SPY on the daily currently has this bearish ABCD pattern. As you can tell, HOP there is resistance where you are potentially coming for a type 1 reaction, as HOP at 584.41. You did have a few attempts to break above that, but ultimately are now failing. You did lose ABCD there at 575.88, where you also had an HSI dot retest line with volume to the downside. So you lost volume here on Thursday, and then on Friday you attempted to break back above it, but ultimately closed here on Friday at 571.04 with a gravestone doji. So gravestone doji by definition is a bearish candlestick formation. So what can we expect here harmonically? Like I said, if we bring out the oscillators, you can see that the HSI is approaching the oversold conditions. So that could be anywhere again to retest that 50 SMA. And if it does lose that level, I do see maybe it coming down for a type 1 reaction all the way to T1 at 547.85. Should it hold support above here, you might be able to come right here for a bullish divergence on the HSI, where you can bounce off the 50 EMA SMA and then try to attempt to close back above 575.88. In the event that it reclaims that level, then you're looking to break above 584.41, which is HOP, and then ultimately down the line test that 599.08 PT3 off the black swan, the bullish black swan pattern that has yet to come up all the way to PT3. So right now, SPY, in my opinion, there is some volume starting to pick up to the downside. So we're going to see if the 50 EMA SMA here around 568 is a level of support. The last time you did retest right below the 50 SMA was back in early September, where you did hold off and reclaim the 50, and you continued to push for higher highs and then ultimately the new all-time highs. So it's going to be very important to see what SPY does here at that 50 SMA. If we go over to the weekly, you can see that also the volume started to increase on the weekly off of increasing volume from last week to this week. You did generate an HSI dot, and you might have a dot retest line also trigger if it comes down to test that previous HSI arrow here, where the high was at 565.16. If you do lose that level, then you're going to come to retest HOP right where the 21 EMA is at 555.17. So you can see that the 21 EMA is a level of support. It has held support pretty much all the way down till since back till October 23rd. Around that time frame, you did lose that level, and you came to test the 50 SMA below the 50 SMA, and you reclaimed and pushed higher. So most recently, the 21 EMA has held support back here back in early of August. You did lose it, but ultimately that same week you reclaimed it. So we're going to see if this is actually going to come back on the weekly to test 555.17. And with everything going around with the election, with the interest rate decision and Powell speaking, we're going to see if there's going to be some volatility in the markets to come and test maybe that 21 level of support around 555. The HSI did cross that midline, so if this continues with increase in volume, if it does go all the way to the oversold conditions, I could see that go down to towards the 531 target here, and maybe even the 50 SMA, which is around 524 to 525, 526. So definitely keep a close eye on the SPY. Jumping over to the triple Qs here. So the triple Qs currently has this bearish white swan on the daily. As you can see at the completion of the pattern, it came down all the way down to below PT2 with a type 1 reaction, and on Thursday you had an increase in selling pressure where you did also lose an HSI dot retest line. I don't know, it's hard to see there, but there is one right here, right where PT2 is at, and you came down similar to SPY to come and retest that HSI dot retest line on Friday, but ultimately failed and slightly closed above the 50 EMA. So what can we expect here harmonically for the triple Qs off of this bearish white swan? So white swan and a black swan usually after losing PT2 with significant volume suggests that it goes for quite the drop into PT3. So there could be continuation based on the harmonic, but we're going to see if that's the case. At first, I would like to see it lose the 50 SMA at 481.84. Then maybe you have some confluence with the 921 crossover, crossing over and ultimately testing that 474.98 target. You also do have an HSI dot retest line here, the screen line that you see here at 467, around 467, 468. You did lose the HSI midline, so if it goes to these oversold conditions, you could see that HSI dot retest line and maybe even come down to test the 200 SMA around 459.26. So just similar to the SPY here, the Qs also is holding above the 50. The last time it did go down below the 50. You kind of retraced, never went to the 200. So there is an opportunity where you actually lose it, but ultimately reclaim it down the line. So it's going to be obviously depending on how the election plays out, the interest rate decision, earnings report. We are noticing that most of tech here, specifically if you're looking at the Qs, since it's most of the tickers that are in the Qs are heavy tech stocks. So those companies have reported, especially the blue chips have reported, some of them doing a double beat, but ultimately guidance for fourth quarter has been lower than expected. So we're going to see if there's continuation to test that PT3 based off of those earnings reports. If we go over to the weekly here, you do have an ABCD pattern on the weekly where you can see that ABC there was a level of resistance at 498.04. You did try to break above it 5 attempts, ultimately couldn't. So in my opinion, you're looking like you want to come back down towards that HSI midline, and that could be towards the 21 EMA, which is around 475 and change. You do have an engulfing candle, so this is up to interpretation. I like to see an engulfing candle completely cover the whole body and the wicks of the candle to suggest very strong strength in that engulfing candle. And others like to consider just the body of the candle as an engulfing candle. So this did engulf the previous candle as well as 2 weeks ago. So there's two candles that it engulfed here. So there may be some suggestion that maybe you are going to come down here for some downside. So if there is this a true engulfing candle, then we're going to see potentially come back down to retest some of these levels, and those levels would be the 21 EMA is what I'd be looking at. The last time it did hold on to it, you came down the week after you pushed for higher highs. So if you do come lose the 21 EMA, the next level I would be looking at here would be a target at 450.72, roughly where the 50 SMA is at, and then there is an HSI dot retest line around 444. Obviously losing that, you would come back for a type 1 reaction all the way down here in the 374 range, but obviously that's too far away. This is on the weekly chart. It could take some time for even that to play out, or we could just push up above ABCD here, get invalidated, and push above the previous all-time highs, which is at 503.52, and complete the type 2 return to hop at 529.73. So jumping really quick back to those levels again on the triple Qs, if you do lose a 50 SMA, the next target I would be looking at would be 474.98. If you find support above here to the upside, the next level you need to reclaim here would be 491.28, and maybe you could see the gap fill there around 495.89, and then recover for a type 1 reaction, or excuse me, a type 2 reaction to OPR, which would create a new all-time high at 505.78. So definitely keep a close eye out on the triple Qs. Jumping over to the Dow Jones here. So the Dow Jones currently has this bearish white swan pattern on the daily. As you can see, it came down for a type 1 reaction, losing PT2, also rejection off of the 21 EMA here on the daily. You did gap down from Wednesday to Thursday, and you did close that gap, but failed to break above PT2. In my opinion here, the HSI did trigger here on the HSI arrow to the upside, but ultimately failed right where PT2 is at, with 2 wicks and now a third wick on Friday. If you lose a 50 EMA SMA, the next level I would be looking down here would be the dot retest line there at 414, and ultimately failing that would bring it down to potentially that PT3 target at 409.03. The HSI is slightly coming back up, maybe to retest that HSI midline. So if that is the case, maybe you could into Monday come and test anywhere between the 21 EMA and PT2 there. If you fail, ultimately you could come back down to test that dot retest line. The volume did pick up from Wednesday into Thursday, and just like SPY and the Qs here, you did have some volume to the upside, but cannot close above the 21 EMA. So on the weekly, we do have this rejection off of HOP. You had an HSI dot retest last week, and this week you actually had increase in volume pressure. So is there an anomaly here? You can see that there was an increase in volume, and the spread of the candle here compared to previous off of a decrease in volume is much smaller. So this is what could be called as an anomaly in volume to price analysis, which means there is potential strength in this potential strength to the downside next week should you pick up on the volume, because the spread of the candle is much smaller than the previous off of decrease in volume. So if it does lose this level here, the next level I'd be looking at would be the 21 EMA, then 407.02. Below that, you come and test a 50 SMA of 394, where there is a HSI dot retest line at 388. The HSI did cross the midline here, so we're going to see if it goes to this oversold conditions here, the extreme oversold conditions, and that could be towards where that HSI dot retest line is. So obviously that's going to take some time to play out. That is a deep retracement should it get down there. That's what, a 7% drop, give or take. So ultimately we need to see news off of that for that to happen first. So if we go over here again to the daily, these are my targets that I have drawn here at 420.72 is the level that it could not break above. The last time it it hovered around those levels was back here in late September, early October, where it had struggled, and then ultimately finally it was able to break above it and make that new all-time high. So right now it did retest here, but could not hold support. So if it doesn't, then I do have some levels to the downside here. There is a gap to fill all the way down to like 412 and change, and that would give confluence to maybe the type one direction completing all the way type to PT3 there at 409.03. So it's going to be very important to see how the Dow Jones moves forward from here, because most of the companies that are in the Dow, there's only 30 companies, have been crazily moving to the upside. So we'll see if this is just a retracement to reset some things for more continuation to the upside. As you can tell, this is in an upwards channel as well, and all it's doing right now is coming for a higher low. Should it find support here on that 50, where it has found support previously, as you can tell the last time it came down off that wick here during September 11, it came, found support, and then pushed for higher highs. So you're at that level again. So if it holds, maybe you come back up for a type 2 return to hopefully OPR, which would create a new all-time high. So if you reclaim PT2, in my opinion, you could start looking for a V-shaped reversal, but PT1 427, then 433.20, which is previously all-time high, and then you have a new all-time high of 435.52, and then OPR at 437.26. So definitely keep a close eye out on the Dow Jones. Jumping over to IWM here, so the Russell 2000, bit of resistance here at that HSI dot retest line. There is a harmonic here, two harmonics, the bullish black swan and also the bearish deep crab here. So right now it looks like it's just in a channel similar to the Dow Jones here, creating higher highs and higher lows. So we'll see if that 50 EMA SMA is actually level of support. We did close on Friday at 218.98 with some selling pressure that came back in, right? Similar to what happened over here, right? You had quite the selling pressure come in with very little buying, and ultimately buying pressure came in when it did retest the 50 SMA there. You really found some volume to the upside with increase in volume pressure, and then ultimately created that higher high similar to what you did over here. And then now you're met again with selling pressure here, average selling pressure, and then some buying pressure came in here at the early part of the week, and then ultimately you did pick up again on Thursday and Friday to the downside off of increase in volume on Thursday, where you did lose a 50, but on Friday you closed just slightly above it. So are we repeating something similar to what happened here? In which case, if it does repeat something like that, then you're probably looking for the support level above the 50 SMA EMA and ultimately continuing to make a higher high. So if there is a higher high, I'd be looking towards that 230 down the line. You do need to break above the HSI dot retest line here around 222, break above the most resistance level that I have here is at 224. As you could tell when I generated the patterns here, you could see that it was just struggling to break above 224. You did break it in this most recent time here where it created that higher high, but was not able to hold it. So again, 222 to 224, 225, that's where you need to break above it. And if it does, maybe you see the higher high go towards that 230 target. Above that, then you have 233.44. If this is actually going to be selling pressure coming in and ultimately you lose a 50, in my opinion, the next level of support would be 216. Below that, you come down to fill the gap there around 213, 212 and change. And losing that obviously comes down and breaks that channel because you would create a higher low. But if you lose that higher low, I think you do break that formation and that trend, and you come down to towards 208, and then to test 200 EMA SMA around 208 and change. So right now the HSI did get rejected here off the midline, didn't really test it, but coming back down, we're going to see if that tends to curl back down. If it does curl back down, then we could see maybe that higher low take place. And if there's selling pressure with increase in volume, then maybe that channel will be broken. But if not, then if it just hovers around here, maybe reclaims and hovers around the HSI midline, then you're looking just to see and wait for news for the interest rate decision and the election to play out. So it's going to be very important to see what IWM is trying to do here, because it is, in my opinion, trying to break out here. But we'll see if selling pressure continues. If we go over to the weekly, we do have a bearish white swan pattern where this is a shooting star off the weekly, right? You did have a little bit of a wick down there, but you hold support above the 13 EMA. If you do lose this level here, the next level I'd be looking at would be the retest of the 21 EMA to test PT1 there at 214.39. Below that, then you have the HSI dot retest line alongside PT2 there at 205.58. To the upside, if you hold support, like I said, that level you do want to break above here is around that 227 range there, and then CD at 228, and ultimately going for OPR at 238. So definitely keep a close eye out at Russell 2000. Jumping over to XLF here, as you're probably noticing, the ETFs are generating a bearish white swan on the daily. So XLF is also doing the same thing here, where you did close on Friday at 46.74 off that Gravestone Dojis. Previous day on Thursday, you did close below 21 EMA here, so you did reclaim it on Friday. So what can we expect here harmonically for XLF? The next level ought to be looking to the downside. If it loses a 21 EMA, would be PT1 at 46.12. That would complete the type 1 reaction. We'll see if that actually comes down to test that HSI oversold conditions, right? In which case you would look for an HSI arrow back up to suggest that it's going to come back up for a retest at CD at 47.81, then OPR there at 49.01. If you lose PT1, the next level I do have is anywhere between the 50 SMA and that dot retest line, which is around 45.50 to 45.67 cents there. So losing that, you can come down all the way to PT2 at 45.07, where I do have a retest there at $45 even. So losing that, you come down to complete the type 1 reaction of scalper's dream at PT2. Below PT2, then you have a case scenario where this is why it's called the white swan, but this is a bearish white swan, where you can have an event that could call out a potential target there at PT3 4-64. Obviously, going down there has to have some negative news that has to come along with that, but we'll see if that's the case. PT1 could be just sufficient, and where you just create a higher low and then you come back for a higher high and ultimately creating new all-time highs. So right now the HSI kind of flatlining above the oversold condition. So we're going to see if you lose that level, maybe you do come back down for a double bottom on the HSI here. So if you do that, then maybe you come back up and you can look for the type 2 return. If we go over to the weekly here, the weekly does have a shooting star, where maybe you come down here. If you lose this level, you can see there's some resistance here or support at around 46.50. You lose that, you come back to test a 9 EMA at 45.96. Below that, then I do have a line there at $45. Even like I said, hop there is at 44.59. Obviously this is way above hop, so this could have been already, this sharp pattern could have been already invalidated, but volume is starting to increase to the downside here. The HSI is approaching that midline, so if it approaches that midline, I do think that's where the 9 EMA is at, and it could be a level of support. The last time you did test the midline over here, look what it did. It came up here and it held support above the midline, and you continued pushing higher. So that was right around here where that hop is. Maybe it comes in, retest hop, finds support, and then creates for a higher high. So definitely keep a close eye out on the financial sector, especially with the interest rate decision. We're going to see if we're going to get a 25 or a 50 basis point cuts, which could affect the banks in general. So definitely keep a close eye on XLF. Jumping over to XLE here, the energy sector ETF. There's no current harmonic pattern on the daily. I know you're going to say, hey, wait a minute, what about the shark pattern? The shark pattern is past 30 bar rule, so something else could be forming here down the line. Ultimately, what I want to bring you guys attention to is the volume here. So VPA, most importantly here, is suggesting bearish pressure is coming in. You had one day here back in October, on October the 28th, you had that Monday where you did have some buying pressure, but ultimately you came with selling pressure again on Thursday, and on Friday you did close at 88.03, which looks like an engulfing candle, engulfing the previous close. Ultimately, I would have liked to see that engulfing candle be off of higher volume than the previous, because it just could suggest the strength in that engulfing candle. So this could be an anomaly because of the spread of the candle is much wider than the previous candle off of decreasing volume pressure, right? So in my opinion, if this was going to be an engulfing candle, you should have surpassed the previous candle with high volume. But we'll see if there's continuation. If this is a true engulfing candle, you're going to come down maybe to retest some levels here again around 87 and then back down to 85. Ultimately, I do have a support line at 82.51 where it kind of got close here back in early September. In the event that it finds support here, you want to reclaim the HSI dot retest line there around $90. If you break above that, then you can see that the HSI dot retest line at 92.67 and then see targets to the upside. If we go over to the 3-day here real quick, we do have an ABCD pattern, a bullish one, where you did go up, you created a hammer candle at the completion of the pattern, and you came for a type 1 reaction towards T1, came back down, ultimately closed at T2 at 92.88, where you struggled to break above, and then now maybe coming for a type 2 return, right? You did have a hanging man there, a shooting star at target 1 at 89.11, so it looks like it may be heading down here to test a 200 SMA on the 3-day, which is around $85. Below that, you have 84.74. And then, like I said, hop would complete the type 2 return to hop at 81.66. If we go over to the weekly, that is a, you can call it a gravestone doji, or you can call it a shooting star, whatever the case is. It did get rejected here, which looks to me, in my opinion at least, that selling, that the bears are in control. So there is selling pressure. You tried to go back up towards 90, but ultimately the bears did step up here and close below the 50 EMA SMA. So last time it did close below, like I said, you came down to test around $83, $82. Over here you did the same thing. So we're going to see if the energy sector here has more downside. You did cross the HSI midline to give you confidence that maybe it comes down towards the lower 80s as well. So definitely keep a close eye on the energy sector. There are some geopolitical issues going on in the Middle East, which could also definitely bring back volatility up and down. So there is an issue too with OPEC, something about the cutting down on oil production there. So maybe that does something, maybe not. So we'll definitely have to see. Maybe also the election, whoever wins the election might also affect the energy sector. So definitely keep a close eye out on XLE. Jumping over to Apple here. So Apple on the daily, still within this bearish dragon pattern. They did report earnings where they did miss on EPS by 39%. They were expected to report 1.60 and they reported at 0.97. So obviously that was the reason why it sold off. And you did lose the SMA, the 50 SMA there on increasing selling pressure, but that had to do with earnings. You also got the 921 crossover to the downside. So if there is more continuation, the next level here harmonically, I would like to see it see if it holds support would be where point C was generated. So point C was generated at 213.92. If you do lose that level, I do think you come to test CD of the pattern at the 1.272, the dragon pattern at 208.71, where coincidentally the 200 EMA is at. Below that, then you have the 200 SMA at 202, and then to complete the type 1 reaction all the way to target 1, PT1, which is calling at 197. What is interesting here is that the HSI is approaching the oversold conditions here. That doesn't mean that you can find support here. It could still actually go to the extreme case there, where it can come down even further. In my opinion, if it does come down further, that's around that target there around 208 to 210. If it finds support here, now that's where, like I said, you want to see where it does here at point C around 213, 214. If it finds support there, you can generate just an arrow back up to maybe retest the 50 SMA there around 227. You do have a slight gap to fill there because of the earnings there that did not fill. It's a very tiny gap, but there is a gap. Ultimately, if you hold above that 50 SMA support, I would be looking to see if it reclaims that HSI dot retest line here, which is right where BC is at of the 86 pattern at 230.75. Above that, then you could continue pushing to the upside to break above this trend line I do have here, where it has found resistance here. It did break above, but ultimately was not able to hold above it. So I'd be looking at 230 to the upside, and then a break of that at 233, then ultimately seeing OPR there at 238.09. Above that, I do have a new all-time high at 242.22. If we go over to the weekly here, you can see that the weekly here, you did lose the HSI dot retest line there around 226 to 27. You did hold support above the 21 EMA. Quite the volume that came in. Obviously, that had to do with all the data that came out last week and especially earnings. So you did lose the HSI midline to the downside. If you lose a 21 EMA, harmonically, the next level here would be 207, which would give confluence to CD there at the 1.272 of the pattern if it does continue to the downside of this week. So definitely keep a close eye out on Apple. Jumping over to Microsoft. So Microsoft on the daily has this bearish bat pattern, which coincidentally it formed that pattern right into earnings. So obviously they gapped down. They actually double beat on EPS and revenue. They beat on EPS by 6.4% and on revenue by 1.58. Ultimately, I did not read the full earnings report, but I'm assuming this is just an assumption that maybe it had reported lower guidance. I've been seeing a trend where some of these companies who have reported so far have reported less guidance on the next quarter. Not all companies, but some of them what I've seen. So what can we expect here for Microsoft? If you're not able to reclaim that 200 EMA, the next level I would be looking at would be this HSI dot retest line, which is around 397, 398. The HSI did cross the midline, so if it goes to the extreme oversold conditions, I'm assuming that's towards maybe where BC is at 390 and my retest line here, support line at 386.73. Obviously, coming down below that level, you start the type 2 return from the bearish dragon pattern at OPR, potentially down the line to 374. If you're able to reclaim the 200 EMA, the next thing I would be looking at would obviously be that gap to fill that Microsoft left. So you reclaim that, the next level you want to reclaim would be target 2, 419.76. That's where the 200 SMA is at. If you're able to claim above that, have a few days above it, there's a bunch of resistance here. In my opinion, you can see where all the EMAs are bunched up here. If you're able to break above that though, then you're looking for this to gap to fill the gap all the way up to 432.10. Ultimately doing that, you would start the type 2 return to potentially hop where you have 433. First you need to break above 433, XA at 438, and then hop at 446 down the line. On the weekly, you can see that this is an engulfing candle of the body, almost engulfing the wicks as well. So there is high amount of selling, and that has to do with all the data again and the earnings that came out last week. So if this is a true engulfing candle, what I mean by true is if this is a definite engulfing candle, you're going to want to see continuation, and this could suggest that there's more downside to be coming next week. So if you do lose that level here for the weekly for Microsoft, you need to lose the 50 EMA there at 405. It is a good level of support. As you can see, the last few times it did hold above it, and ultimately never has closed below the 50 on the weekly since back in March of last year, of 2023. So you got to put a little respect here on the 50 EMA. If you do lose that level, the next level I do have is this line here, this 386.73. As you could tell, this is the last time where it broke the last time, early in January 24. That's where you pushed to new all-time highs. Came back to retest it in April, found support, then created a new all-time high, dropped again in August, found support, and you're right now you're just kind of stuck. This you could also argue that this is potentially a bearish flag here, right? If that plays out, that gives confluence to that engulfing candle, in which case you're looking for more downside, and then finally coming again to test this line again where you can find support, and then maybe see if you can make a W formation, right? A W formation in harmonics would be seen as a a bearish pattern, right? W, you would come down for a lower low. Point D would be generated somewhere here, and then this would be a bearish harmonic back to the downside. Maybe fill that gap, who knows. Obviously it's too early to tell. This is on the weekly chart, it could take some time to play out, so definitely keep a close eye out on Microsoft. Jumping over to Amazon here, so Amazon on the daily currently has this bullish shark pattern where you can see at the completion of the pattern it went for a beautiful type 1 reaction all the way to target 2, where it did find resistance at 195, and they did gap up here because of earnings. They did double beat EPS by 25% and revenue by 1% here. So what can we expect here for Amazon should it continue to the upside? The next level I would be looking at would be a retest of the previous all-time high, which was at 201.20. It did get very close on Friday where it missed it by 70 cents. It went as high as $200.50. So if we break above that, I took a fib retracement from the previous all-time high to the swing low here, and that I believe is the 1.272. Yep, 1.272 here, so that's at 214.69, which could be a new all-time high should it continue breaking to the upside. In the event that it doesn't, the next level I'd be looking at would be target 2, where it did get rejected last time it tested there. If it loses that level, then maybe you start to come down to fill that gap where it does close at 190.60. You can grab some liquidity there, which looks like it's also creating a channel upwards, similar to the other blue chips, where it's creating higher highs and higher lows. So you come down here to fill that gap, maybe retest at 188.65, where I do find that as a level of support. As you could tell, this is where it was trying to break for a while, and it finally did it with earnings. So you could just come back, get some liquidity here, find support, create that higher low, and then ultimately push up towards that 214 down the line. The HSI, it's interestingly here, is looking like a cup and handle, so we're going to see if that actually plays out, because if it does, then we could see towards that higher target at 214 for a potential new all-time high. If we go over to the weekly here, you can see that that is increasing volume, obviously with earnings. The next level that this pattern is calling is hop at 203.04, which create a new all-time high. This is a bearish shark, so you never came down here for a type 1 reaction all the way to target 1. So ultimately right now it looks like you are coming here for a type 2 return to hop. So we're going to see if there's more continuation to the upside on Amazon, to see if it goes all the way up to hop and then towards a new all-time high, or it gets rejected here. If it does find some resistance here on that 201 target, next level I'd be looking at would be the terminal bar there at 189.77. Similar, almost very close to that target I do have at 188.65 here on my support line. Ultimately losing that, then you come maybe retest the HSI dot retest line where OB is at the 886 of the pattern at 175.96. So you would come back down to test the 50 EMA SMA, where it does typically find support. So obviously it's a little bit far away from that target, so we're going to see what Amazon has in store for us next week. So definitely keep a close eye out on Amazon. Jumping over to Tesla here. So Tesla currently has this bearish bat pattern where you can see that it completed the type 1 reaction all the way to target 2, and then ultimately on earnings, beat earnings, gapped up, which would look like it was going for the type 2 return to hop. Ultimately failed at XA with some selling pressure here. So what can we expect here harmonically for Tesla? So it looks like it maybe wants to come back to retest the entrance of the gap here, which is around $241 and change, roughly where the 21 EMA is at. So if it continues to the downside, the HSI is approaching that midline, which would be right at the entrance of the gap. Lose that level, in my opinion, you come back down to test target 1 at 231.29, where there's also a retest line, HSI dot retest line around 228. Below that, then you come back down and maybe fill that gap towards 218.72, and we would retest the 200 EMA when you fill that gap as well. And we'll see if there's more continuation to the downside. There is selling pressure coming in. Volume relatively average. We haven't seen if this is more continuation to the downside, but I believe if you cross that midline, you might see some increasing selling pressure. If it finds support here above the 21 EMA, then the next level I would look for Tesla to reclaim is 258.89. Just call it around 258 to 260. Above that, that's where it is at, and then maybe you could see a retest around the 52-week highs there at 273.54. I believe that's a 52-week highs. Yep. So above that, then you have hop at 283 and a gap to fill at 289. If we go over to the weekly, you can see that the volume pressure has been decreasing on the weekly. You did lose target 2, so the 200 SMA on the weekly is roughly around 236. The HSI just hovering just below that midline where it is finding resistance just slightly below. So it is curling back down. We'll see if this is going to come and retest that 200 SMA. Below that, then you have target 1 at 225.61. I do have a target at 223.79. Quickly jumping that back to the daily. Anytime you come here to test that 258 target, Tesla does like to trade in a range between 258.89 and 223.79. You can just draw a line around those levels, as you can see just more previously what it's been doing. Every time it closes up or tries to break above 258, met with resistance, comes back down in this channel around 223, and every time you lose 223, you come even lower to 180 and ultimately finding resistance there. But when we broke back above it in September, look what happened. You went up to that 258, 260 target, failed, came back below again, recovered, didn't go as low as 180 over like you did back here during October, the early part of October. You reclaimed 223 and ultimately tried again to 258. So in my opinion, you could be trading in this range until you finally get some liquidity, either for whatever direction it's going to finally go to for Tesla. So definitely keep a close eye out on Tesla. Jumping over to Google here. So Google on the daily currently has this bearish butterfly pattern, which did generate after its earnings release. So Google did double beat on earnings, on EPS by almost 15% and on revenue by over 2%. So what can we expect here harmonically? At the completion of the pattern, once you gapped up from earnings, you did generate the butterfly, in which case you did come for a type 1 reaction to target 1 at 168.72. There is an HSI dot retest line that it's currently above, so that's around 170. So what can we expect here harmonically? The HSI did trigger that HSI arrow on Thursday where it was overbought, and you did come back down, but we'll see if there's more continuation to the downside, because if this is just a completion of the type 1 reaction at target 1, then you would expect a type 2 return if it finds support above here, above T1 a couple days here, right? You still need a bit of confirmation, maybe 3 more candles, 5 in total. If it does find support above, and then maybe you could start looking for its movement to the upside for a type 2 return to potentially XA at 181 and then hop at 185.60. On the gap up, you did come down to fill this previous gap it left here on its last earnings. So you did gap up, and then you ultimately close that gap. So right now, if you do lose this level here around target 1, the next level I'd be looking at would be the 121 EMA here, where there is an HSI dot retest line around 166 and change. Below that, then you push back into the range that you currently were prior to earnings, which was around 165, 166, and 160. So it's okay to come and retest, maybe even complete the type 1 reaction all the way to target 2 at 160, grab some liquidity there, find some support just slightly above the 200 EMA, and then ultimately push up for higher highs. So if it does decide to break up here above 181, like I said, 185.60, previous all-time high would be at 191.75. Ultimately, a new all-time high I do have there at 193.70 down the line. If we go over to the weekly here, the weekly has an ABCD pattern. It tried to attempt to retest 184.44 where ABCD was at, ultimately just fell short. Did go as high as 182.02, so we're going to see if it's actually going to continue to the upside. The HSI did cross the midline, so it looks like it wants to come to those overbought conditions, which could be anywhere between 184 and hop at 197, which would be a new all-time high. So definitely keep a close eye out on Google. Jumping over to Meta here. So Meta, no current harmonic on the daily. We did have this bullish black swan, which kind of completed the type 1 reaction all the way to PT3 at 604.71. It got close. 602.95 was a high there, and then it had another attempt there at 601.20 just right before earnings, right? So they did release earnings. They had to double beat. They beat EPS by 15% and slightly 1% on revenue. You did gap down because of that, and ultimately right now on Friday you close at 567.16, which is slightly below my support line there at 567.41, which it did lose. So what can we expect here for Meta? The next level to the downside would be that 50 SMA, roughly around 556. Below that, you do have a smaller gap to fill at 544.20, slightly below hop, and then losing that level, in my opinion, gets pretty interesting for Meta, because you could start seeing the descent down towards maybe even all the way down to the second gap fill around 513.12, and then ultimately testing PT2 a high of 4 where the 200 SMA is at. You did cross the HSI midline on the daily here, so that is roughly just slightly below my target there at 567.41. So if it decides to go to the oversold conditions, I do think it could be anywhere between hop at 547 and 518 where XA is at from the previous bearish bat pattern. If we go over to the weekly real quick, you can see that it has a white swan. this is a bearish white swan pattern where it is not able to hold above OPR. This is the third week that it has closed below 577.71 and also my resistance lines here at the 90 EMA. So it did cross the HSI midline, and if there's continuation, like I said, the next target here off of this pattern would be 542.81. Below that, then it gets really interesting towards PT1 at 493.80. There should be, if it does come down here, Meta comes down, there should be some support at 542. Losing that, then the next level of support would be that HSI dot retest line around 505, 504. So it's going to be interesting to see what Meta does here moving forward. Volume obviously picked up after earnings and even into Friday, right? Friday's average. If you ignore the past 2 days, obviously you're going to have high volume buying and selling during earnings and as well as a heavy data week. So the next day you have continuation of that, but Friday kind of puts it back to prior to both of those days in anticipation of the news of earnings. So you kind of had quite significant selling pressure here compared to the previous week. So I would definitely keep a close eye on Meta, since I do think if there's more continuation, you could see a nasty move to the downside. So definitely keep a close eye on Meta. Jumping over to Netflix here. So Netflix on the daily currently has this bearish dragon pattern where it did come back down prior to its earnings below BC, but ultimately held that level of support and reclaimed the 50 EMA SMA. So what can we expect here for Netflix? Obviously, after them beating earnings, you did create a new all-time high. I drew a line there at 765.75, which was the previous all-time high to a swing low. That was calling for that new all-time high. It did go as high as 773, but as you could tell right now, that line at 765, you had a bit of resistance here on Tuesday of October 22nd, as well as Friday, October 25th, and then you're just having some wicks attempts at breaking above that, but just falling a little bit short of that. So what can we expect here for Netflix? If this is resistance and you come back down, the HSI did cross the midline, but it's kind of like flatlining just slightly below it. If it does come below it, the next level I'd be looking at would be the 21 EMA there around $739. Below that, there is that gap to fill all the way down to 704.41, where there's, coincidentally, I do have a support line at $700.99, where you do match the HSI dot retest line as well. So you could be like, the other chips are also creating channels upwards, just creating higher highs and higher lows. So if it does come back down here, you just fill the gap, create that higher low, maybe grab some liquidity again, and continue pushing even higher. If you do lose this level here around $700.99, you start the descent down for the dragon pattern towards CD there down the line. So obviously that's still too early to tell. If we go over to the weekly, you have this white swan pattern where OPR is finding support above that. So support at OPR is 739.78, so that's 3 candle closes above on the weekly. The volume to the downside on the weekly is decreasing volume, so we're going to see here what it does on Netflix on the weekly, because right now, based on this harmonic here, you kind of look a little bit more bullish than you are bearish, but on the daily, you're kind of looking like maybe you're hitting a bit of resistance here. So maybe this is a symmetrical triangle here, and we'll see if there's more continuation to the upside. So definitely keep a close eye on Netflix. Jumping over to NVDA here. So NVIDIA closed on Friday at 135.40. No current harmonic so far on the daily. So prior to its earnings is still about 2 weeks out from here, a little bit more than 2 weeks on November the 20th. So it's yet to report earnings, but prior to its earnings, I thought it was not going to create an all-time high, but ultimately it did go and create an all-time high at 144.42. So I'm going to draw a line there at 144.42 where you kind of had met resistance there as well twice. So you do have an HSI dot retest line around 142, so that gives us a little bit more confidence that at least for now that is a level of resistance. I do have a support line or a resistance line at 144.71, and I believe that's from a fib ratio from previous all-time high to swing low. So we'll see if it actually goes up there. If there's this resistance here, as you can tell, we had significant selling pressure on Thursday where you closed below the 21 EMA, and on Friday you barely closed above it off of decreasing volume. The HSI, what's interesting here is that it is in the oversold conditions where you could generate an HSI arrow that could indicate a reversal back up, maybe to attempt that dot retest line or even that 144 or all-time highs. So it's going to be interesting what NVIDIA does moving forward. On the weekly, if we go jump here real quick, this kind of looks like a double top. You also look like a W formation is potentially forming here. So we know that in harmonics, a W formation could be seen as a bearish pattern. Or you could argue that this is also an M formation, right? You can come back down here, and that would be ultimately a bullish reversal back up, but you would need to come back for a lower leg at point D. So right now it's still unclear. We have to see whether NVIDIA is going to continue to the upside. Right now tech seems to be, at least on earnings, some of those techs, even if they report earnings, are still coming down, the big blue chips. So we'll see what NVIDIA does moving forward. Right now we do have a range here between 132 and 142 that it may be trading in that $10 range up until earnings, right? In the event that you lose 132.66, the next level I'd be looking at would be the 50 EMA at 128, and that would put it in a new range here between 132 and 120. NVIDIA does have a gap to fill here all the way down to around 119 and change. Obviously that's gonna it's a little bit far away from that target, but it could definitely come down and retest those levels should you get bearish news on NVIDIA, and maybe you could approach that gap fill maybe closer towards earnings. You'll maybe come back down to below 132 in anticipation of earnings. You'll have that gap to fill, because usually I've been noticing that when some companies report, they usually report towards a gap. The price action is very close to a gap to the downside and to the upside. So we'll definitely see what NVIDIA does moving forward, especially with the election and the interest rate decision. So definitely keep a close eye out on NVIDIA. Jumping over to Bitcoin. So Bitcoin was very bullish on the week. It almost attempted to retest the previous all-time high and create a new all-time high. The all-time high, at least on this exchange that I'm looking at, I do use Bitcoin USDT for the Binance exchange, and that previous all-time high was at $73,777 even, and you did go as high as $73,620. So it got very bullish, and then fell short of the previous all-time high, and you did generate an HSI dot and looks like selling pressure off of increase in volume. So you did come back down to test 69K. That's a level I had drawn there that I had that if it broke above 69K, then we could see that attempt to the all-time highs, and it did exactly that. But now it's potentially just coming here to retest that breakout, right? That is see if it finds support above it. It is right now Sunday, 1:46 p.m. Pacific Standard Time, and it's looking like it's forming a hammer candle on the daily, right? So this candle will be closing in about 2 hours as of this video, and the HSI is approaching the oversold conditions. So maybe you do find a reversal candle here, maybe you do form an HSI error, but we would probably need to come a little bit lower, see if it finds support. If it forms a hammer candle here off the daily, then definitely you want to see it push back up for maybe a reversal and finally break out to new all-time highs. If you go over to the weekly, you can see still that this HSI dot retest line on the weekly is resistance. You do wick up, you closed back above it in June, failed, and after that you just have attempts with wicks above it and ultimately fell. Just like this week, we also had an attempt above it, and right now we're currently closing just slightly below it. So that's still a huge level to respect, at least so far for Bitcoin. If we go over to the 3-day, the dragon pattern, you're holding support. You held support above CD there at 52.3K. You attempted to close above BC there at the 886 of the pattern at 71.8K. Ultimately, are not finding support above that target. So you did come down to HSI midline. See if you find support here, which is where the 98 MA is at. If you find support here, maybe you can come back to OPR, which would create a new all-time high at 78K for Bitcoin. So right now we're obviously just looking at to see, this kind of looks like a bullish breakout, right? You do also have what looks like over here an inverse head and shoulders, and you kind of broke out here, but still find a bit resistance. It ultimately looks more bullish than it does look bearish here, but in the event that it is bearish, the next level you'd want to lose here for the bearish case scenario would be 69K. Come back down to the 50 EMA there, where the HSI dot retest line around 65K. Losing that level can get quite interesting. You come back all the way down to the $55 to 60K range. So definitely keep a close eye out on Bitcoin. So that's all I have for you guys in this video, guys. So if you do want to catch me streaming, I do stream over live on Twitch from Monday to Friday for market open and market close. So if you want to catch me streaming live, Link to my Twitch is in the description box below. Having said that, I hope you guys have a good rest of your Sunday, and I will see you guys bright and early tomorrow. Take care, everybody, and peace.